Welcome to Money News. I'm Kathleen Walter. With us now from New York is David Gurwitz, Managing Director of Charles Nenner Research. And David, thanks so much for being with us today.
Thank you, Kathleen, for having me. I appreciate it.
Well, gold just posted its largest quarterly loss in at least 45 years due to selling amid fears the U.S. Federal Reserve may wind down its stimulus program. Were you surprised gold dropped as much as it did?
Well, I think I've been on the show before. Charles Nenner founded the Charles Nenner Research Center, and he told everyone to get out of gold at around 1900. So not only were we not surprised, we predicted it. The move down has been pretty painful to a lot of people after 7 years of going up. So that's one of the things the research tries to do, is keep people out of trouble, because it's very difficult to invest in anything when you are psychologically going through a feeling of you're down, it's never going to come back.
Do you think the volatile moves in gold have finally come to an end and that prices will stabilize?
I think that's a beautiful two-part question. Prices will stabilize. The volatility may not have come to an end yet because cycles are bottoming in several weeks. So you still have this up and down action. But we believe that gold is not, we're not negative on gold or silver, so we think it is soon to come to an end. But people have been going through this, as I said, for a while. Very painful, but we think if they could hold on, they will see that the gold and silver will go up again.
So where do you see gold's price headed for the rest of this year?
Okay, I can't give that answer because we don't give a price target until it starts to move when we do our time and motion studies. But longer term, we do believe that we have a target above 2,000, so it'll actually go back to its highs.
Do you think that gold has lost its appeal as a safe haven?
That's a great question. I think people have to think differently about what the term safe haven means. A lot of money's coming into America now from all over the world. So the idea that a category is a safe haven as opposed to a place is one thing to think about. I think a lot of people own gold and they didn't sell it, the actual gold and silver itself, so I don't think they're getting rid of it. It's clearly shaken everybody with the presumption when you see something like this, because while it's going up, you don't think it's going down. Like Apple, when it went to 702, we said to get out and to buy puts, and no one really thought it would get down into the high threes. We think Apple's going to go back to its high. So the answer to your question is yes, it has lost its appeal, and that's probably why it's making a very good time to get ready to buy it.
David, what can you say about the outlook for silver? Will it simply follow gold for the most part, or will a separate set of factors drive its price?
Well, we believe all the factors are taken into account in cycles, which come from the Greek word circle, and I recommend that all the viewers go to charlesnenner.com, right to the site, and we'll send them free samples for about a month of the research to see what it's involved, covers stocks, bonds, commodities, currencies, and economic indicators. But silver should have a very nice write-up. We like PAAS. We sent out 2 weeks ago a chart on that, and again, all your readers, they can write in. We'll send it to them to show that we see it's going to be very positive.
And David, turning to the general economy, what would you tell the average investor regarding asset allocation so they can be protected against any shocks to the economy?
Well, let me go through all the different, let's go through stocks, let's go through bonds, let's go through hard and soft commodities, and let's go through currencies quickly just as an idea, because we cover everything. Bonds have had a 30-year bull market. Obviously, rates 30 years ago went from 18%, now they're down to almost nothing. And we think long-term bonds are going to go the other way, so people have to start thinking about actually being short bonds, however they do it, whether it's TBT, some other way. Not yet, but soon for quite a while. And that's something that takes some practice and planning for, because no one ever really did it much for the last 30 years. So that's a core holding. Grains and grain stocks and fertilizers we think will be bottoming towards the end of the summer. That's going to be a place I think people should look to be long. The stock market still has, it's in this trading range up to 1714 is a target on the S&P futures, and 1500 is a downside target shorter term, but longer term we think the stock market's down for many, many years. So with stocks down many years and bonds down many years, gold we think will be longer term up, silver we think will be longer term up, copper, which is not like gold and silver, obviously more an indication of the economy. We took everyone out 8 or 9 months ago. It's near a short-term bottom, but longer term it's still down. And currencies, which is something very often a lot of people in America don't really think about an investment area. currencies are something that they should really think about in terms of the fact that the dollar is strong now. Everything, you know, the euro, the yen, the Aussie are weaker against it now. We cover all this in the report, but starting next year, we believe the dollar is going to really weaken significantly. That's how I think people should frame their investment outlook, not so much in terms of what all the media is saying about stocks and bonds, but to view everything in a different light. We try and help that.
David, last question for you. What are the most significant events that could occur that would have the potential to derail economic growth both globally and here in the U.S.?
It's another great question. We don't know what's going to happen. We look at cycles, and then when cycles are topping, we assume something's going to happen at that top that's going to make it into a top. I'll say one thing that people are not used to hearing. There were war cycles going back thousands of years. And you see what's going on in the world, these things could become much greater, and that's something that could cause crude prices to go up a lot. Again, the A implied B theory, as Charles always says, I'm not smart enough to figure that out. I could just take each individual data series and try and tell what that says about things, but we believe, given what we see economically, that it's not going to be good. Things will happen that are going to negatively affect it. The fact that gold and silver have been down so much, and as you asked before, a very good question about the safe haven mentality, indicates it's not so much the A implies B, it's the timing of it, and that's where cycles can really help.
All right, David Gurwitz of Charles Nenner Research, thanks so much for being with us today.
Thank you, Kathleen. I appreciate it. I enjoyed Newsmax very much.
Thank you. And thank you for watching Money News.